Hello everyone, my name is Muhammad Taha Bukhari. Today we will take a look on the markets and what happened exactly in the past week. And especially it was a week full of events, full of data, and full of changes that happened in the markets. First of all, what's important for us is was the Federal Reserve the most important meeting last week, and we had 75 base point increase in interest rate as expected, and it was priced in. But the most important was what Jerome Powell said and what the Federal Reserve is preparing for the next meetings, and what is its projections for the future and for the economy. The Federal Reserve by through Jerome Powell, they say right now that the economy is slowing down for sure. Everyone knows this from the data that you are getting. You have many indicators about the economy that is slowing down, from the GDP that came for the second quarter, it came negative, minus 0.9. Before that, the first quarter was at minus 1.6. These two quarters, or two successive quarters of negative growth means a technical recession. But for the Jerome Powell is denying the recession itself and saying it's just a slowdown the economy, as the labor market right now is still strong, and that's good for the economy. That's making demand more solid, from what he said. Like, we have an employment level still on 3.6% for the last 4 months, which it seems that the labor market stays strong, and the level of 3.6, it's something that is so much good for the economy and still give the US economy more resilience. Other like indicators than the GDP for the consumers, especially the consumer confidence. In the US, it's a little bit going down, but still acceptable. The business confidence still, it's going down too. If we go for example on the business, the manufacturing PMI is going down. It's slowing down, especially. We have service PMI. It's the same thing. Service PMI is slowing down too. So the slowdown was expected for everyone, and even the Jerome Powell said that this slowing down was expected. But the objective from the Federal Reserve right now is this slowdown in the economy will lead to a soft landing, not a recession. But in the same time, dilemma is about higher inflation and fighting inflation. You can see the prices. The inflation rate is at 9.1, a record level, and many forecasters, many economists, they are talking about an inflation that maybe it's stopping down, especially with energy prices that is going down, especially oil. But we have a core inflation that is going higher and higher, and we had in Friday numbers that are not indicating that inflation maybe is going down, especially PCI core. We have the PCI that came. PCI. Wait a second. This core PCI price index that came at 4.8%, which indicates that it's still going higher and higher. But somehow, many forecasters that it's stopping, and we may go down in the next month. Especially we are in a season of vacations, and people spend more, travel more. So it's okay. The same thing is happening in Europe right now, with an inflation that is going to 9%, close to 9%, as it's a season for tourism season, especially in some countries in European Union, Spain, France, Italy. So in the US, it's the same thing. Jerome Powell in this speech tried to give some confirmation that the Federal Reserve is watching, keeping it with data, and for the next meeting in September, they don't have something clear. That's what they are saying. They don't have something clear. They don't know even for them will it be 75, another increase by 75 basis points, 0.75%, or will it be around just a half a point? We don't know. But what we know is that investors and especially traders take this comments and this speech from Jerome Powell as a positive. As a positive for who? Positive for stocks. We can see especially technology stocks, big names. It was crazy, like for Apple, for Apple, for Google, for Microsoft, those big names that they had their earnings this week and it came better than expected. They also get this boost from the Federal Reserve, from this sentiment, this improvement in sentiment from the speech of Jerome Powell. That's made really crazy upward levels in those stocks, and we have 10% in one day yesterday on Amazon. We have Tesla that made also some gains, 14% gains in 2 days after the earnings, and another upward level like increase in its price by another crazy numbers after it. So the markets right now, the stock market is buying. It's buying. We can see this and this is too the Nasdaq, the SP 500. We can see the Nasdaq, the US 100 is close. Technically speaking, we are close to break an important support level around. You can say 13,000. 13,000. This level is so much important to somehow confirm a reversal that may happen in the Nasdaq. SP 500, we will say something similar. SP 500 is in another resistance level. We are waiting this confluence point where we had the MA 50 moving average, the moving average of the 100, 50 and the 100 moving average around support this resistance level that's played support for 2 times or 3 times. So it's so much important level. A breakout around those level, it's really a game changer for stocks. So this week was so much positive for stocks. We saw the Nasdaq, we saw the 500, we saw the Russell, we saw the Dow Jones. All of them, they were positive. They were indicating that investors and traders are buying. They are. Why this crazy levels? Especially we have stocks and we have indices that went down in such huge levels. Like we have Amazon, for example, that lost from the peak in 15 November 2021 until now, until the last point, it lost close to 45%. So it was cheap for minis to buy it, and for different, especially technology stocks. And we had a week full of technology stocks earnings. They were better than expected. So this was for the US. They had this meeting from the Federal Reserve. They had the GDP negative GDP to the second quarter negative GDP. So it's a technical recession. Janet Yellen denied. Jerome Powell denied this. Many members deny this, and they're talking about a possibility of a slowdown. There is a slowdown, but no recession right now. For the DXY, it was. There was from it's 1 year or less than 1 year where we have this negative correlation between the stocks and between the dollar, and how the dollar was playing the safe haven role and was leading the currency, the forex markets, and for many months until we had some touched some important like resistance levels, some higher levels that we didn't saw from 2 September 2022. So it touched this, it came with around 0.618 Fibonacci retracement levels. Like it was like an important level for the dollar to reverse from it, and it happened. The reverse happened, and it's continuing. From like it's continuing. It started from last week, from 2 weeks, and it's continuing. And generally, if the stock market will continue for sure buying, the stock market by the way took the cryptos with it. The cryptos right now, if we want to talk by numbers, the Nasdaq and the Bitcoin, we can see this in charts. If we go to the Nasdaq and we try to make a comparison with Bitcoin, it will be clear that this correlation between the Nasdaq and between the Bitcoin, it's clear so much. The Bitcoin and Nasdaq from the top at November 21, the correlation, it's clear, and this rebound in this correction or rebound in stocks, it's happening in the same way on cryptos, which is a positive for cryptos. And if we see like it's clear in front of us this correlation that exists right now, and it's working it's working perfectly. So if we want to go to the cryptos that they were affected so much this week with this news and with this for this events and for this change that happened in the markets, we can see the Bitcoin technically. If we want to see things from a technical perspective, we can see that before all this happened, we had the Bitcoin touched a support around 132,000. That is support coming from a resistance in 11 December 2017. It was the top of Bitcoin that time, closer to 20,000 from in 2017. So played as a support level. In the same time, we had a clear indication that Bitcoin traders and everyone is stopped selling Bitcoin. It was a clear indication. We had a triple bottom, clear here, a triple bottom. So it was a clear indication for a possibility of reversal. It was a pattern for a reversal, and I was talking about myself. I was waiting for something to happen. Like everyone was waiting for a new event that to change the trajectory of the future of cryptos. Especially, we lost 70%. Bitcoin lost 70% of its value. Ethereum more than 70%. So this correction, or this, maybe we can talk about reversal, but this correction, it's a clear. The next level, at least for the Bitcoin, it's if things continue with the stocks, the stance stay positive and everything stay positive. It's around the next resistance point. It's around 28,657. It's coming in with a moving like a 100 moving average. We can see this 27,057 playing resistance first of all, but around these targets we can see a resistance around Bitcoin. And after this level, if the Bitcoin goes toward the 31,602, a breakout of this level, it's mean a real reversal happening right now in confirmed reversal on Bitcoin. Right now, this correction still inside this channel that we have, that is coming from the top at November 21 and is continuing, played so good many times. So right now we are at least seeing this around those levels. The next level, that 28,668, or you can talk about the 28,000 levels. We may say resistance at level, and you see if it will be a real breakout at this level or not. Same thing is happening with Ethereum. Ethereum, it was crazy. If we want to see how much increase happened or how much upward we have in here, we are talking about close to 76% happened on the Ethereum in just 2 weeks, in not like 2 weeks. And right now the Ethereum is around this resistance level, coming from a last level of support plus the 100 moving average. So it's a confluence point, but we will see it's Saturday and this Sunday, and maybe in Monday we will see maybe a breakout around those levels. So right now the sentiment is positive towards cryptos, but we are in some important levels. We want to see some breakouts, especially on the Ethereum. Why Ethereum? We are going to the second version of Ethereum 2.0 in the Ethereum. Ethereum is going from the old mining system to a new system, from proof of work to proof of stake. So it's something huge happening right now for Ethereum, for the Ethereum projects, and this will make Ethereum more efficient, less the carbon footprint of Ethereum will go down to 99.99%, and will make Ethereum more institutions, more people able to adopt. And Ethereum is the second after Bitcoin in terms of market capitalization and the volume of trades. So it will be so much important for Ethereum, and focusing on Ethereum, and I'm focusing so much on Ethereum for the next weeks and this month, and then especially the next month, with this merge from the old platform to a new platform. So this is for cryptos. For the forex market, we said that the dollar is losing. It's losing the lead. It's selling. This dollar is selling, and this selling could continue. If you want to take a look on the price action right now on the dollar, we are around support level right now, around 105.82. But a breakout of this level will generally lead us to the next level, that is around 104, around 104, around 104.5. That's the level that I am waiting. Especially, we have the moving average of the exponential moving average 50 with this channel that is playing the role of resistance, giving us the resistance and support levels around 104.5 could be a good level for dollar to find its support, preliminary support for sure. And if we go to the euro dollar, that touched the parity at 1.00, and trying to make some patterns, like I will say, it's this accumulation of price around those levels for a reversal. But no, we have no data. Right now from the euro, at least if the supply of gas and the geopolitical problems with Russia, it didn't yet solve it, or partially solve it, especially with the Nord Stream 1. The Russians are really playing with European Unions, cut in. They are like playing toward them in terms of supply. After the maintenance, Putin said about we will recovered the supply by 40%. They decreased it to 20%. Talking about the turbines playing around this point, and this gives more fear toward the recession that could happen in the European Union. We have a higher inflation that is really affecting the economy. It's affecting the consumers, and we have the majority of economic indicators around the European Union are slowing down. Germany, France, Spain, Italy. We have like a rollout of a geopolitical rollout right now in Italy. We have really many problems happening right now around European Union. So the euro don't have any, at least right now, a hope to make anything with the dollar. We will still, even though the dollar is selling, even this weakness that we are seeing right now around the dollar, we are not seeing. We will, at least before the gas problem solved, we will not see any improvement generally. We have a gas prices. We can see this last week where the gas is. What's the price that the gas touched? We touched the price of $9.4, which is a huge price, and this make the energy cost for the European Union normal consumers, it will be so much. The pressure, the inflation pressure will continue right now with those energy prices. So right now we can't talk about any progress on the euro, especially in those conditions. For other pairs like Japan, and when the dollar starts selling, the Japan played its preferred role, the safe haven role. The dollar Japan, for example, the pair that touched a level that we didn't saw from January or February 2022. So it was a level that made the Bank of Japan being a little bit not just curious but fearing that this selling off on Japan, this oversold territory where Japan is right now, it could hurt the economy. It could hurt the balance of payments, the cost of energy in Japan. So right now, Japan is taking the lead from the dollar, playing the safe haven role from the dollar. If it's this week was good, so much good for Japan. Even we see that Japan with many pairs from the Australian, from the New Zealand, from the Canadian is going down. If we want to more of the weekly chart, we can see that from many pairs, the Canadian, the pound, from the New Zealand, Japan, from the Australian, Japan, I am seeing patterns like triple tops. I am seeing a clear indication. It was clear that there was, like, for example, New Zealand and Japan, a clear candles indicating that rejection of this level on the weekly chart. So a reversal somehow. I was waiting for it, especially from the New Zealand Japan, from the Canadian Japan, from the pound Japan especially, and the Australian Japan. The reversal, I was waiting for it. Will it continue or not? Right now we have just what is leading the Japanese yen to go forward is safe haven role, and the dollar is weakening. So the Japanese yen is taking the role with right now we have this Bank of Japan that is not helping the Japanese yen. Why? We have the Japanese yen interest rate is still negative, minus 0.10, which is against every other G10 or G7 central bank reaction. Right now we have a Federal Reserve, Fed, that with the Jerome Powell talked about, we are going to 3%. Maybe we can go between 3 to 3.25 to 3.5% in the end of the year. And Japanese right now is still negative. why they want to hit the 2% inflation. They want to have more stimulus for the economy. The Japanese economy is so much different than any other economy, but this is not helping the Japanese yen if they want more strong Japan. We know that the Bank of Japan, historically, it's known for interacting directly to the forex market, and you can see the Japanese yen, the Bank of Japan, buy in Japan, and take it to change its value. It's no one. It could happen, and Japanese yen, from the Minister of Finance, from many responsible, they were taken. We are like they were saying and talking about. They are monitoring the level of Japanese yen, and they are careful. They are careful and they're monitoring carefully what's happening. So right now, it's more relief for the Japanese responsibles. So, but the Japanese need more of correction to enter some comfortable territories for the Bank of Japan. For other, if we talk about commodities, it's this reversal that happened on dollar. It's helped gold. Yes, because gold went down. It went down. The rule is positive. Gold is a negative dollar, and negative dollar is a positive. A negative dollar is a positive gold. That's the rule, and especially right now, these fears of recessions around the world. A dollar that is going down, it's helping gold to go up, especially the gold touched an important support. The support, we are seeing the support. The last time we touched it in August 21, after it March 21, June 20, it was a resistance, and the March 20. So it's an important level. This range of price here, it's at a support level. It's the most important. It's so much important, and it played the support so well. In the 4 hours, we saw a concentration of price and the pattern of reversal that is happening, and I was bullish on the gold, and this was so good. Right now we are on this channel, and we have a resistance. We are in a resistance point for sure on the 1-day time frame. In the 4 hour, it's the same thing. We have the 200 moving average, this orange line, 200 moving averages. We have in the 1 day close to the this resistance level with this MA exponential moving average of the 50 that played before it, like we played a resistance level before it, like a confluence point before it. So the idea here is that we have a correlation right now between the gold, between the stocks, and gold. We have this negative correlation between the gold and the dollar. We have this correlation between the stocks and the cryptos, and this yen that is playing its role as a safe haven. I was waiting the Swiss to play too, but not that much. Didn't play that much. So my projection is that more positive optimism right now. So it's more positive, more buying on the stocks, more buying in cryptos. But we are, like I said, we are in some resistance level on the majority of indices. The Nasdaq, the SP 500. We are on the Nasdaq, on the SP 500. We are in some much important resistance levels, so we should be careful. But a breakout of those levels will lead those indices to go up. It will lead cryptos too, and same thing is happening. Like we can see Ethereum, it's like it's somehow close to what is happening right now in the indices. Clear resistance level. If a breakout of it, we will go directly to the next level around 24,000, 2,400, 2,337. So it's confluence point for sure. So it's around the moving average, 200 moving average, with the upper channel of a downtrend, which will play like a resistance level. So I am bullish on the stocks, bullish on the cryptos after they confirm the breakout. Bearish on the dollar, and this correction on the dollar, we will see if it will continue or not. The yen still strong, the gold strong, the silver also the silver was even better than gold. We had similar chart in silver, and I was waiting for this reverse to happen, especially I mean this price accumulation here, and this 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 in 4 hours we have this concentration of price, this pattern of a possible reversal happening on the silver, and it's clear. It was clear that it's a solid point, especially it's a node support level coming from 2020 and from 2019 until 2020. So it played its role there. The next level from a weekly chart is around 20. This level 20.64. It's a confluence point for sure. And around here, 20.64 coming from an old support from 13 May 2020. So in general, this week was a week for correction for many assets, a week for continuation like of the upper trend on the positive correction on stocks and this is that it's coming with good earnings. For the cryptos are correlated, for especially I am focused a lot on Ethereum for cryptos. For forex market played dollars selling the and taking the lead. We have euro that is still weak. So this is what we have. For the bond markets, we can take a look and final look on the bond markets, and we can see the US 10 years, it went down and break a neck of it was like somehow like we can say double top, not a double top. Oh sorry, it's maybe a head and shoulder. We can say head and shoulder here. Head and shoulder, and there's a breakout of an important level here. So it's a reversal, confirmation of reversal on the US 10 years. We have the median line of this channel that could play possible first support here to continue down. We have the German 10 years, it's going like crazy down, so it's negative for the euro. It's continuing to go down, it's a negative trend, so it's so much negative for the European Union, the euro. So right now the rule that when stocks go up, the bonds go down, it's working. The lead, it's coming. The stocks are leading the markets. The liquidity is going to the market. So investors are starting to take more risks. There are more risk on right now. We have more risk on the stock market, on many other risky assets. So it's normal that the bonds sell. So we are more. I forget, especially 10 year German 10 year. It's I am more bearish on it. This is it. This is what I have for today. Thank you everyone, and have a good day.